Okay. We're streaming, so it's 8:36. We will call the October 4th, 2024 meeting of the audit committee to order. We have some committee business as our second item, but for the first item, I'll turn it over to Heather Lewis from our independent audit firm M&B and Company to go over the 23-24 independent audit and draft financial statements. Heather, thanks for joining us today.
Yeah. So these are in draft, but they are pretty much finalized. They'll be finalized right after this meeting. So the numbers and words and everything in here are what you're going to expect to see at the board meeting. So I know you guys have the PDF, and I will try to alter my page numbers to go with the PDF number. So we're going to turn to the audit report, which should be page 3 of the PDF. I'm going to look over your shoulder.
Yeah, that's fine. Just got, yeah.
Okay, that's the extra classroom. I can go to extra classroom. Is that what you guys have open? The extra classroom first?
So I just.
Which one were you on? The draft financials?
Financials, yes.
Statement?
The 70-page document.
Yeah,
Yes.
that's
Thank
what
you.
I'm on.
Perfect.
And you're
Excellent.
looking to start with what?
Page 2?
The audit report.
Page
Oh,
3,
the
sorry.
audit
Yes,
report.
page 3, thank you. That's probably going to happen a few times, guys. So page 3. So this is our independent auditors report. So this is where the opinion is right at the top that we've audited the district's financial statements and related footnotes as of June 30th, 2024, that we believe the financial statements are fairly stated in all material respects in accordance with generally accepted accounting principles. So that's that clean opinion, highest level of assurance. Basis for opinion. So we have auditing standards that we have to follow, government auditing standards. We have to be independent. We have to maintain our ethical, professional ethical standards and all of that. And we believe everything that we've done is sufficient to provide a basis for our opinion. Responsibilities of management. So management's responsible for preparing the financial statements, having good internal controls in place, monitoring those controls throughout the year, and also making us aware if they have any concerns that the district wouldn't be in existence 1 year from now. Highly unlikely, especially for a public school, but that's one of their responsibilities. So then if we turn to the next page, which should be page 4, the auditor's responsibility. So our responsibility is to obtain reasonable assurance that the financial statements are free from any material misstatement. There's certainly a risk that we won't detect a material misstatement, especially if it involves collusion or anything like that. But that is our responsibility. We exercise professional judgment, maintain our professional skepticism. So we ask lots of questions throughout the audit process, and we're always saying, show me. It's not just sufficient to ask the question, we want to see it as well. We have to identify the risk of material misstatement and perform our audit procedures appropriately. We get an understanding of your internal controls to design our audit procedures, not to give an opinion on them, but to help us with our audit process. We evaluate your accounting policies and any estimates, and then we report back here to those charged with governance. The required supplemental information. So the standards require certain schedules and stuff to be in here, which are included after the footnotes. We don't give any opinion on those. They're just required to be in here because the standards require it. And then if we go to the next page, up at the top, the supplemental information. So the state and federal government also require additional schedules to be in here. Those schedules, we believe, are fairly stated in relation to the statements as a whole. So that's the only way that we can really give any sort of assurance on those schedules. And then we have a report in accordance with government auditing standards that we'll go through as well. So the next page starts the management discussion and analysis. A lot of good information in here, kind of explains the numbers and gives you some future information about the district. I don't know if there's anything you wanted to highlight.
No, I shared a preliminary year-end analysis with the board in September, but just for the benefit of you guys, we, when we look at, we had positive performance in terms of expenditures. I would attribute that primarily to 2 areas, as we talked about at the board meeting. We budget for, 100% of staffing, of course. And if you see our board agendas, we're in better shape as hopefully school districts across the state are in terms of filling vacancies, but we do, to the extent that there is turnover, we do see, that we did come in under budget in terms of salaries. And then benefits, obviously payroll benefits kind of flow with that. So we saw that we were under budget in terms of benefits. Then the other piece is the self-funded health insurance. So, the district assumes significant risk in terms of, just projecting for the future there. We planned conservatively, so that was another major area where we saw ourselves, perform under budget. So a positive trend, and as I shared with the board, we will take that information in as we're planning for 25, 26. It's helpful to, we'll of course be looking at where we ended up. And then on the revenue side, I think the major driver of revenues being above projections or budget for the year were interest earnings. We entered the NICLAS municipal investment pool last year around December. It wasn't something that we had planned for or factored in at the time that we created the 23-24 budget. So that resulted in us bringing in more revenue than anticipated. That was kind of there. So, as we think about the future, we're of course planning for the ongoing capital projects, and we expect to see, more. Our debt service will increase, but the state aid that we bring back as a portion of what we spend on facilities improvements will come into the district. And then, anyone who's reading the paper knows that the state is taking a close look at foundation aid. So it's kind of something that we're keeping a close eye on. So the significant increases that we've seen in state aid in the last few years, in particular, but as the state's fully funded that formula. Now we know that we can't expect to see those major increases, but we also know that costs are going up, and the state kind of maintains the commitment to provide schools what they need. So those are, that's kind of the landscape as we think about 23, 24, the planning for the future.
Okay, so now if we go to page 16. So page 16 should be the statement of net position. So pages 16 and 17 are going to be the full accrual financial statement, or that long-term focus. So this is going to include your long-term assets, being your capital assets, and all of your long-term debt within this number. So it's supposed to make you more comparable to a not-for-profit or for-profit entity, because it includes all the liabilities and all the assets of the district. One thing to point out is your total net position is in a deficit of 74.8 million, all the way down at the bottom there. And your unrestricted is a deficit of 167 million. So that's really driven by your other post-employment benefit liability. So that is that large liability for the retiree health insurance. That's really the driver for your net position being in a negative, because there's no way to put any funds aside for that. So while you're not going to see this if you were to compare yourself to a not-for-profit or for-profit, because they're going to try to fund that liability, you can't. You have no way to fund it. You can't put money aside. You can't put money in a reserve. So that really causes districts to look as though they're not in a solid financial position, but that's not the way a district should be looked at anyway. So seeing that isn't alarming. So then if you turn to page 18, this is going to be next page. Is that 19?
Nope.
18. Perfect. Okay. So this is your balance sheet. So the balance sheet is more of a short-term focus, where you look at the individual funds themselves, and each fund has its own column. It's more on the budget basis of the way the district budgets annually. You'll see on the asset side, as Matt mentioned, you have your investments, a large number in investments, which is the third line down, of $9 million, which really helped to increase your interest and earnings this year, because you were in NICLAS for the year. We turn to the next page. This is the revenues and expenditures for those governmental funds. I like to look at that third line up from the bottom, which is the net change in fund equity for each fund, just to see how they did. So your general fund, so that's your voter approved budget, where all the costs to educate the students and all of that are maintained. And you can see that you had a net change in fund equity of a little deficit of 218,000, meaning your expenditures exceeded your revenue, but you also appropriated money last year, being for the year 23-24 budget. So you were intending to operate at a deficit of some sort and use your fund balance to support the general fund. Your special aid fund, so that's where all your state and federal grants that have a specific purpose that they need to be set aside for are recorded. There's no income or loss in that fund, because as you earn the money, as you spend the money, you earn the money. So they balance out. Your school lunch fund is where all the cafeteria operations are held. You'll see that you have a positive 111,000. So your revenues exceeded your expenses in that area. For this year. Your special revenue fund, that's where scholarships are held. And you see there's a small little deficit of $1,600. And really that's just the scholarships that went out exceeded the donations or earnings that came in this year. Your debt service fund, so that's where you record excess unspent bond proceeds or premiums on bond offerings or bond offerings that you have. You record them in your debt service fund, and then you're going to use those to pay down debt in the future. So you can see this year, the net change in fund equity is about 482,000, quote loss, but you did move money over to the general fund to pay down debt this year. So that was expected. Capital projects fund. So those were all those big voter approved projects are. Your overall, the fund itself is in a deficit of 8.8 million. Your net change in fund equity is positive. This is really due to you issued a serial bond this year. So when you issue a bond on prior projects or new projects, that gets recorded as revenue. So that's what's causing you to have a positive change, your revenue exceeding your expenditures. But overall, the project's in a deficit because you are in the middle of projects where you issued short-term financing as well. So you kind of had two pieces this year. So combination of issuing long-term financing, which gets recorded as a revenue, and short-term financing, which is only a liability, no revenue yet. So combination of those is what caused you to have positive change in fund equity, but overall deficit in the fund itself. Okay, so then if we turn to page 31, we're going to skip past some of the footnotes. Okay, so page 31, I want to look at that table that's partway down the page that has the reserves. So this is the detail of the reserves that the district has at the end of the year, at the end of June 30, 2024. So these reserves are, some of them require voter approval, some of them require board approval, but there's something that the funds that you set aside each year. The biggest change that I saw was really your capital reserve. So it's 7.2 million at the end of the 6/30/24 year. You did use some of that this year and move it over to your capital projects fund. And the same with your debt service. You did use some of your debt service fund this year as well. So those balances went down, but those were intended uses of those reserves. Okay, so then if we turn to
Just add
Sure,
the
absolutely.
capital reserves in particular. That really represents two things. Number one, we made an appropriation of $8 million in the voter approved project from February 2024. However, we were able to at year end, given positive budget performance, move more than 5 million into that fund. So that 7.2 million kind of accounts for the 8 million that we had shared with the community that we would be using for the 2024 project, and is kind of in a way sort of is restored a bit for future projects given where we ended the year.
Okay, so now if we turn to page 42. So page 42, I want to look at that first table that says interfund, and it has receivables, payables, revenues, expenditures. So this is a way to show the borrowings in between the funds. And it actually goes right into what Matt already said. So you had approved to have funds moved from your general fund for those capital reserves into your capital projects fund. So one of the things we always do is we like to test to make sure those transfers were allowable, they were approved appropriately, they were done timely, all of that kind of thing. So we test those for allowability, but because the numbers were bigger this year, I just wanted to highlight where that shows up on your financial statements. So then if we turn to the next page, page 43. The only thing I want to point out here, so we have this pension plans area. There's quite a few footnotes. This is related to your participation in the employees retirement system and teachers retirement system. So these numbers are completely provided to you by the state. The state tells you whether or not the plans are fully funded or not fully funded. In this case, they're both liabilities again this year for ERS and TRS. But if you wanted to see specifics, they're all here, but it's important to remember you budget for them annually and you have no control over the assumptions or anything that are in here. So it's a lot of disclosures, and you'll see it's considered a significant estimate, but there really isn't anything that you can do differently related to that. So then if we turn to page 50, the table up at the top here, so your changes in short-term debt, I just wanted to point out your bond anticipation note. So you had at the beginning of the year 42.1 million in bands. They matured at the end of June. So then you converted those to renewed them, and you have a new band. for 38.5 million. So just to show you that this is short term, it just has a 1 year life on it, and you either continue to renew them or within 5 years you convert them to long-term financing, which would be your bonds. Which if you go to the next page, the table here will show you your bonds. We have bonds and notes payables, serial bonds. So we can see you had an addition of 21.5 million. So those were the new bonds that you issued this year. So you did convert some, you had two pieces. Like I said, you had some bonds and then you had some bonds this year. But within this table, your largest liability you'll see is your OPEB, other post-employment benefits. So it's 159 million at the end of 6/30/24. So that is the number that is specific to your district. So that is based on your specific contracts, your specific population, and what you're offering your retirees as far as the portion that the district is going to pay for health insurance. And that is also a significant estimate. You hire an actuary to perform that calculation, but that is your largest liability within the financial statements. So then if we turn to page 62. Okay, page 62 and 63 are going to be the voter approved budget for the general fund. So it's the revenue side and the expenditure side. The column all the way over to the right is going to tell you whether or not you were over or under budget on each side. So this year, your revenues, you were over budget on your revenues by 4.8 million, which is about 4%. So while the number is big, percentage-wise, it's not, a huge percentage. And you can see in the use of money and property, that's 1.2 million positive variance. That's where those earnings on your NICLAS show up, is in that line right there. And then on the next page, it shows the same thing on the expenditure side. So that column again, all the way over to the right, will show you if you're over or under. So you are underspent on your expenditures by 5.4 million, which again is 4.5%. So the budgets are pretty spot on. I think within 5% is certainly a reasonable variance. So you guys are spot on with that. Okay, so then if we turn to page 67. So page 67 will show you whether or not the district is in compliance with that real property tax law that limits your unassigned fund balance to no more than 4% of next year's budget. So it shows the calculation right here that the state expects. And you can see you guys are right at 4%, which is the intention. And we certainly perform our audit procedures related to that because we know that you guys like to come in at 4%. So we do different procedures and design our audit knowing that that's something that you guys are striving to do. Some districts are way over and they're fine with that. Others want to stay within 4%. So that changes how we approach the audit each year. Okay, so then if we turn to page 71, this is our next report to go through. So this is the report in accordance with government auditing standards. And it lets you know, again, that we, as part of the audit process, get an understanding of those internal controls to design our audit procedures. It gives you some definitions of what a deficiency is. There's significant deficiencies, material weaknesses. It gives you all the definitions there. But for you guys, we did not identify any deficiencies that we considered to be material weaknesses, but we had the caveat that there could be material weaknesses or significant deficiencies that we didn't identify, but nothing that we came across as part of our audit process. And then if you turn to the next page, we also have to consider your compliance with any significant laws or regulations. And right at the top, we tell you we did not disclose any instances of noncompliance that we felt needed to be reported. So those are two very positive things. So no internal control deficiencies and no noncompliance that we felt needed to be reported. So then if we turn to the next report, which should be on page 73, this is the report in accordance with the uniform guidance. So this is because you have those federal awards, so you have the separate audit that needs to happen. Right at the top, our opinion is that we believe the district did comply in all material respects with the direct and material compliance requirements you are required to comply with. So again, that's that clean opinion. Basis for opinion, so we still follow auditing standards, government auditing standards, and we also have to follow the uniform guidance, which are the federal guidelines for this particular audit. Still have to be independent, still have to be ethical. Management is responsible for complying with all the requirements for all the federal programs, but we're responsible for testing them for just the major programs. On the top of the next page, so my responsibility is to obtain reasonable assurance that you have complied with everything that is considered direct and material. We still have to maintain our professional skepticism, identify our risk that you're not going to be in compliance, and then get an understanding of those internal controls over compliance. Then we're required to communicate back here to the committee and the board, and then our report on internal control over compliance. So again, we have to consider all the internal control pieces, identify deficiencies, that kind of thing. But we did not identify any deficiencies in internal control over compliance that we considered to be a material weakness. So again, that means there's no findings. That's what the ultimate piece is here. So then if you turn to page 76, this is your schedule of expenditures of federal awards. So the top programs, the special education cluster that subtotals to 1 million, that was the major program this year. That was a program that, based on our required calculations, that was a program that was tested this year. Overall, you can see your total expenditures were 3.6 million. So the single audit threshold is increasing, but it's not going to change anything for you guys. It's increasing to 1 million, not for next year, but for the year after. But you guys are likely going to be over that million, even without COVID dollars. So I wouldn't expect anything to change for you guys. And then the only other thing I wanted to point out is on the very last page. So we have to report back on findings of the previous year and whether or not they need to be repeated. So last year we had a finding related to procurement, which was just related to the district verifying that purchases were allowed to be paid with federal dollars. Those vendors weren't suspended or debarred. You guys corrected that, so it didn't need to be repeated. So I think it's, I mean, we're required to report anything anyways, but I think it's important for you guys to know that that was corrected pretty much immediately. So any questions on those statements before we jump into letters and extra classroom? Okay. Okay, so now we're going to go with, it's the AUC 260 letter. Is that what it says at the top?
Yep.
Perfect. AUC 260. So the first page, we have already talked about everything on there. So we're just going to skip right past that. Page 2. So we have requirements that we have to follow with regards to independence. So because we prepare your financial statements, there's certain safeguards and stuff that need to happen internally at the firm. The safeguard is there's a partner that's independent from the job that reviews the financial statements. But internally, we also have to make sure that there's somebody at the district that has the appropriate skills to oversee that service. And in your case, we do believe that your assistant superintendent of business operations has the appropriate skills and expertise to oversee that service. So we're able to perform it and the safeguards are all in place. Significant risks identified. So professional standards require that we identify risks at the organization. Doesn't mean that they've happened, just means that they have the potential to impact the financial statements. So the risks we have for you guys are management override of controls, which is always a risk at every organization. Financial reporting bias. So we talked about, you guys are right at the 4%. That could be considered a financial reporting bias. So we designed our audit to address that. And then your compliance with the uniform guidance. So those federal guidelines, there's a lot in there. And you guys receive funds from a lot of different sources. So there's certainly, additional risks related to that. But we design our audit to address those. Significant accounting policies. So your accounting policies are in note 1 in your statements. No new accounting policies this year. And we didn't have anything of concern to report there. Significant accounting estimates. So we talked about 2 of the estimates, your other post-employment benefit, and then the participation in employees' retirement system and teachers' retirement system. A lot of assumptions within those. The other one is your compensated absences. So this is the accrued sick time that your employees earn. So you have to do a calculation on the likelihood that they will earn that benefit next year or in the future, not necessarily next year. So those are the 3 most significant estimates. We evaluate those, believe they're reasonable. On the next page, page 3, lets you know we did not encounter any significant difficulties during the audit. Uncorrected and corrected misstatements. You corrected everything. We had one item that was material, so we're bringing it to your attention, but the capital projects funds, there was just an expenditure and account payable that was understated by $73,000. We didn't feel that it was a significant issue, which was like an internal control item. This was the only item, and we're just required to report it here because of the dollar amount to that fund, but not anything that we felt was of a concern. No disagreements with management, and then the rest of the letter is just standard language. Okay, so the next two pieces are the extra classroom activity funds. If we go through the financial statements first for ECAT.
Can I just see, Libby, did you have any questions about that letter? Nope. Okay, sorry. Just want to make sure.
Yes. Okay. Extra classroom activity funds, if we go look at page 3, this is the audit report. So we've talked about this before, but we issue a qualified opinion for the extra classroom activity funds. We believe in general with these types of funds, regardless of the district, there's a risk that not everything that should make it to the central treasurer to be deposited into the bank necessarily makes it there. It's difficult to know how much you should be collecting and how much should be remitted to the central treasurer. We believe it's just a risk within extra classroom that you really don't have much control over. So we qualify our opinion for that specific reason. And as I said, it's not unique to your district. It is the belief as a firm. This is how we feel that this needs to be approached. So that's what our qualified opinion says, and then our basis for qualification. So management's still responsible for preparing the financial statements and ensuring that the cash basis of accounting, which is how you report them, is appropriate. That is how you're supposed to report them. So that is why you would believe that that is appropriate. We have to bring attention to that because it's not a GAAP basis financial statement. And then the next page is just continues on, same responsibilities for the auditors, and then the actual financial statements are on the following two pages, pages 5 and 6, and then the footnote. I wasn't really going to go into much more with the extra classroom. The last piece that we have is our management letter, so our recommendations related to extra classroom. So it's important to note that we perform our procedures to be in compliance with what the state education department expects that you're going to have present for your extra classroom activity funds. So we look at those areas just to, assist with compliance with those specific requirements. So the first item, accounting controls over cash receipts. Because of that qualification, there's that risk that we are also going to have a finding related to that you don't necessarily know everything that should be collected and remitted to the central treasurer. So there's limited controls over those receipts. So that's what that first finding is. Top of page 2, club ledgers. So there were 2 out of 60 disbursements and 9 out of 60 cash receipts where that receipt or disbursement was not included on the student ledger, or was missing from the ledger, or was a different dollar amount. That's a pretty common finding because you're relying on the student treasurers to make sure everything gets reported correctly and that the advisors are overseeing that. It's not huge numbers, 2 out of 60 and 9 out of 60 isn't gigantic. I've certainly seen where we just don't get ledgers, they just don't maintain them, or 58 of them are missing. So not terrible, but certainly something that the state expects to be maintained. Documentation. So we just had 1 out of 60 disbursements that didn't have the proper supporting documentation. For budgets and fundraising, so during our testing of cash receipts, there were 6 that didn't have documentation to support that the students were preparing their expectation of what they think the revenue is going to be generated from the fundraisers or whatever other types of events that they are having. And then on the top of page 3, so during our testing of cash disbursements, there were just 2 of the disbursements that were missing some of the sign-offs. One was for a bus for a club's field trip. It was missing the student treasurer and advisor sign off. And the second was for a faculty breakfast. And that was missing the principal sign off, but did have the student treasurer and advisor sign off. So overall, not a huge number of transactions that were missing pieces, but still some transactions that were missing sign offs. Any questions?
Nobody's texting any. Looks like Sarah gave a thumbs up. Would you, I know, extra classrooms always, like every district. Are you able to sort of, I know that there's been a lot of changes sort of in how we like train and provide guidance and stuff like that. I don't know if you can speak to, have you noticed improvement in that over time, or maybe internally we can speak to just if that looks like it's going in the right direction. This seems like a lot less than we've had in the past, which I think is good. I don't think we'll ever get to 0. It's kids, right? I mean, it's a learning process.
Yes.
I think the trend is positive. I don't know. I don't want to
No, I would agree with that. I would say it's certainly trending in a positive direction. And it's always going to depend on the students that are involved and the advisors that you have. So it's difficult to say what specifically is driving that. But I would say that the district's attention to the funds and making sure that people are properly trained. And when there are things that aren't being done properly, it's brought to their attention, certainly helps reduce the number of findings. So I would say that it's certainly trending in that positive direction.
We did a training for all advisors at the middle school and at the high school level last year. And, in addition to going over the procedures and making sure that everyone knew where they could find all the required documents, we really emphasized that, this is a learning experience for the students and that, it needs to be, it's kind of a shared responsibility. And so we'll plan to continue that training. We have a new extra treasurer at high school. We'll continue to work with that individual and hope to keep moving the trend in the right direction.
Is the standard not district specific to us, but is the standard that all should be, clearly in your opinion, it's a qualified opinion? So how do other firms give a clean opinion? Because you don't want a qualified opinion, but if it's common and usual, is your opinion that the standard is wrong? Because this is abnormal, like.
So in
Relative to
my
this.
opinion, the intention of the clubs is, doesn't lend itself to be required to be under audit. In my
Sure.
I think the purpose of the clubs are, as you said, to really train the students and to give them that opportunity to understand the budgeting process and understand how you make sure you have enough revenue coming in for disbursements that you have in the future. So I personally don't believe that an audit should be done over these. I know it's something that has been asked of the state in the past to, why do we still have to have this additional audit when we're never going to be able to be 100% compliant because there are things outside of our control. So that's my
So it's
personal
state mandate
opinion.
more than anything else.
This is a state requirement, yes, that you have these funds audited annually and you have to submit your audit. So it is a state requirement, which to me is the only reason you need to have it done. So I think it's, I don't know how beneficial it is for the districts, but that's not, unfortunately, that's not my. And that's what when we're looking at the documentation, that's what we're looking at. It's the state says under the regulations where you have to have an audit, they're also saying these are all the things that should be in place: profit and loss statements, signatures, these separate student ledgers and central treasurer ledgers. So that's why we audit to that extent.
Okay, thank you.
I think the internal audit that we did, it was 2 years ago, was helpful in taking a deeper dive into the procedures, bringing some attention to it and helping us move in the right direction. I think in terms of internal audit, we discussed this in June. We want to make sure that we're selecting an area where we really get the most value out of it. So I think having that on a periodic schedule, but there are certainly other areas that are more significant for us to look at when we talk about our special area, but it's something we should have in that cycle.
I don't want to speak for Heather either, but you have, how many clubs in here?
Yeah.
Which means you have how many different potential areas of internal control weaknesses, which is really where the basis for that opinion comes. You can't get comfortable as an auditor to say, we can issue a clean opinion just for that fact. Too much cash running in and out. There's no way to know how much should have come in. But you got total receipts of
$150,000, it looked like.
Well, for the year, you had total receipts of 239,000. Who says that's not supposed to be 280,000? Or you just have no idea. So to me, the opinion is really just more a basis of what's actually going on. That it's just too hard to get a conceptual, clean opinion on it.
Right. That's a good point. Each one of those clubs has separate individuals involved in them. So you can't just rely on one club could be doing a fantastic job, but there could be 5 clubs that aren't. So if you go to the bottom of the next page.
Every year it's so you can't rely that it's a consistent advisor. You can't, and that's more like,
Sure.
like you can't rely, the kids change. Maybe they're the treasurer for 2 years. By the second year, they know what they're doing. But again, it's like who prioritizes what? There's too many variables that, but I do, I mean, I understand from your perspective, and of course, districts could do it as part of their internal audit. But it at least gives eyes on every year. And if we noticed like a spike, right? Like we noticed a decrease, if we noticed a spike, then we would know, all right, let's, it may never be clean, but at least it allows us to focus internally a little bit more on it.
Yeah, it certainly does help support the need for the training and why we need to have the appropriate procedures in place, certainly.
Thank you.
welcome.
Every year I learn something new, so it's good.
Any other questions or? All right, well, I want to thank Heather and her team at MMB for all of their work on this. Certainly want to thank our business owners team for all the work that goes into this year round, certainly the preparation that goes into that work was led by Michelle. So just appreciate getting to this point. Thank you.
Yeah.
Take care, Heather.
So that brings us to agenda item 2, committee business. We'll start with the nomination of committee chair. I think the way that we've been doing this, and I'll talk about the charter in a minute, is that the committee nominates a chair that then goes to the full board for approval. So I'm going to ask if there are any nominations for the chair, and I see one.
So on.
So Libby, I believe
Libby has nominated Kim, and I second that nomination.
all in favor?
Aye. Libby has said aye in the
Okay.
chat.
Oh, yes, I see it. Yes. Thank you, guys. All right.
Congratulations.
Thank you. Okay, so we'll just move on to the annual review of the committee charter. We can just take a quick glance at it. Others are listed there we're trying to make them consistent or as a new committee is added to make sure that the charters all sort of are represented one another in form and content and intent. Does anybody have any questions or suggestions for changes on our current charter?
So just a little, the audit committee charter was established in 2014 and has not been updated since that time. Actually, 2014 is when the board had decided to add 2 community representatives to the committee, but we have not reviewed it or made any substantive updates in that time. The charter does require that it's reviewed annually, so I think this is a good meeting to put it on the agenda. You'll see, we've had some, of course, I've had a policy committee over the years, but since 2014, we've added some new committees. The academic program committee is new this year. The finance committee was new within the last 2 years. We're just, as Kimberly said, we're trying to get to a consistent format. I think the format that we're using for the newer committees is more user friendly and it just gets directly at the committee's function and how it operates. I think what we'll do is kind of, if it's okay with you, is we'll leave this open for feedback until our next meeting. And at that point, we can take the current charter, kind of move it into the new format and put it on that agenda, and then incorporate any feedback that we hear from committee members. And then we can bring that back for approval at that time or for continued discussion.
Sounds great. Yeah, there are definitely things that we can shift around, add the how the committee chair selected, that kind of stuff that is included in other charters. And there are other charters in board docs for reference, just so you can see how we're like the academic is newest, finance is fairly new. So you can just email suggestions and we can discuss at the next meeting.
I would suggest handling the policy in a similar way. The policy again was adopted in 2014. Since that time, we've reviewed, I think, almost every policy in our district policy and our board policy manual. This one has not been updated since that time. So again, we'll just keep it open for feedback. And then if this committee has any feedback after our next meeting, then that'll get forwarded to the policy committee for review. So the idea is that this year we're reviewing and updating if needed. So we'll handle it that way. Just if you have anything, you can send it by email and to me, and I'll make sure it gets to Cynthia as well.
It looks like next review policy 5572, which is policy for the audit committee. So similarly, looking at it for feedback, changes, suggestions, deletions, etc. This was established again in 2014 or adopted in 2014, so it hasn't been touched since then. It's always good to review. When we do policy review, we're looking at things that have either changed in practice or have really moved to law. That doesn't necessarily need to be 100% restated in the policy. It can be referenced. Or things that are really, you can summarize shortly, that are become practice in the district. So instead of it being 100% laid out, in Word in the policy, it can be summarized. So we'll do the same with that. Does that make sense?
Yep.
Okay. And then approval of the minutes of the May 10th, 2024 audit committee meeting. Do I have a motion to approve?
Motion to approve the minutes from the May 10th, 2024 audit committee meeting.
I'll second since we're delayed. All in favor? Aye. Okay. So
Libby
that,
says hi on the chat.
thank you. So that passes 3-0. And we do have a date on the calendar for the next meeting, which is February 14th, 2025. Same time.
Same time,
place.
a different place. Yeah, so at that point, we'll be
That's
room.
insane.
So I'll make sure that the calendar invite reflects that. But yeah, looking forward to it. If you're not there before then, welcome you to our home at that point.
Yeah, great. Awesome.
Exciting.
All right. Motion to adjourn.
I move to adjourn.
All in favor? Oh, aye. No. Second aye. All right, we are adjourned. Thank you.
Thanks,
Thanks,
everybody.
Libby, for doing the stuff in the chat and text.
Have a great Friday, everyone.
You too.